Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming to you with today's market recap. It is the 21st of June. It's Friday, and it just felt like, for the most part, broadly speaking, we just wanted the week to end. A lot of back and forth, pretty tight range candle right at resistance. Let's start fresh next week. Seems like what the market was thinking, and I don't mind at all. That's never a bad Friday in my personal opinion. And welcome out, everybody. Great to see everyone as always. Hope you had a great day both in and out of the market. Certainly some areas moving. We did see some pretty good profit taking over in the REITs today, maybe presenting us a pullback opportunity early-ish next week. We might need a little bit of confirmation before we can get there, but a little bit of selling over there. Banks just kind of doing what they do, hanging around in the middle of nowhere. Energy remaining strong, still seeing some decent movement in crude. The dollar breaking down, that's probably the big one from a technical point of view here today, taking out support, taking out that 200-day moving average as just bears have really gotten into the dollar, at least for right now. Still some more decent movement in the healthcare sector as well. As you kind of think about the upcoming earnings, we're not too far away from it being earnings season. Starting to get a few more S&P companies, most notably next week, Nike coming out with earnings. We're getting towards the tail end of June, which means it's going to be earnings season in just a couple of weeks. And so it is a good reminder to be double checking your trades for those earnings dates so you can plan accordingly, whether that's exit before, hedge when you get there, build the earnings specific trade, whatever it might be. It is about that time again. We're only another week or two away until it's really on our mind pretty much every day for the foreseeable future. So, and good afternoon, Scott. Welcome out, sir. Always a pleasure. Great to see you. Hope you are doing well. Hope you had a great day in the market. Of course, it was kind of boring, right? Little status quo, kind of taken five from the last couple of days of bullish movement, maybe setting us up for a break next week, which is always more fun. I'd always rather have a breakout on a Monday than a Friday if you're letting me choose. So do kind of keep in mind we got earnings right around the corner. Not a bad idea to be just thinking about that, planning accordingly according to whatever your personal styles and philosophies around earnings tends to be. On the S&P and really broadly, we saw a little more selling on the rut here today. But S&P, Dow, NASDAQ, all down just a fraction of a percent. We kind of had a little bit of a run early, thinking, yeah, let's just do this. Let's just do this again, right? And then it's like we almost realized, yeah, Scott, it's Friday. Let's capture some gains and call it a week. Go golfing, go take a nap, go get ready for next week, go do whatever it is that we like to do. And good morning, Lloyd. Great to see you. And it really felt like it was that kind of a day. Really boring. We did see a fair amount of profit taking to close the day out, but that's what I'm going to chalk that up to. It's Friday. It's 15 minutes before the close. Let's unwind some of these things that have been pretty good to us this week, and we'll reset for tomorrow. So really, other than an early surge and then really that last little bit of selling at the very end of the market, very, very uneventful day, broadly speaking. It is going to give us a little bit of a confirmation area in my mind for where our breakout on the S&P 500 is, and that will be taking out today's high. So there's going to need to be a little bit of upward move. That's going to put us just about 2960 for a little bit of, for me at least, confirmation of that break. I think there's a very legitimate chance that we get that at some point next week. Today's candle doesn't really make me think that it has to be Monday, but certainly the bulls are very much in control, still settling right on top or right at that old breakout point on the S&P 500. Always fun to look at the weekly on the S&P. For me, that could be that confirmation on this weekly type of a chart on this particular pattern. So I'll be looking for it to take out that high to give me kind of that broad signal, if you will, on the S&P 500. And there's room, like I said, anytime you break all-time highs, there's always room to run, right? What it did allow us to do is kind of catch up a little bit, not much, but push into that resistance that we hadn't tested yesterday on the Dow, able to kind of work a little bit closer to the very tip top of that zone, right? We will have this one day, I have to kind of zoom back over here. Got to do a lot of zooming. We had this one failed breakout day, this little doji that we'll have to kind of contend with. I'm not going to read too terribly much into it because there was no real follow through, gap on the open, sell off on the day, and then immediately sell the very next day. But we do have to contend with it. Again, I think we can almost use today's high as that confirmation for that break on the Dow Jones. So very, very similar on both the Dow and the S&P. Price movement wise, very similar over on the NASDAQ here today too. Just wasn't going to be that day. It looked like it had a chance early, and then once that fizzled out, it almost felt like, yeah, it's either nothing or a little bit of profit taking is how this day is going to end. And of course, it went the route of nothing / a little bit of profit taking. Still got some room to go into our all-time resistance zone on the NASDAQ. Won't be this one to death, but still, not loving, not quite trusting those semiconductors just yet. Although we did have Cisco, maybe we'll take a look at Cisco when we get to the tech sector. They're, much like the broad market, I think they gave us a candle that can be our confirmation for a breakout. But speaking specifically of the NASDAQ, a little bit of room to run. We can kind of use now the intraday here. On the NASDAQ, we actually have kind of used the same resistance zone for 2 days in a row. And unlike the S&P, unlike the Dow, where it's really battling major resistance points in my mind at least, on the NASDAQ, I'm going to respect that swing high. Of course I am. I think it'd be foolish not to, but this is not the same, in my opinion, as far as a level of resistance as what we're seeing on the S&P and on the Dow Jones. So that's not going to be nearly as a big of a concern of pushing us back down. At least in my mind, it's not. Certainly, I think we should respect it, not assume that it's just going to fly right through that. But I think there's still, an opportunity in this field, especially if we can get those darn semiconductors to start helping us out. I don't know if we're going to get it. At least they need to go sideways. They are sideways, but it's so early. It's too much for me to trust, I guess, is a good way to put it. Little more selling over in the rut than the bigger indexes here today. Not really much to say about it, I don't think. You could say that this is a little bit of a pivot through the downward movement. Maybe if we get some confirmation early next week, you could make that case. But even if that's the case, what are you doing with it? Are you going bearish? I wouldn't. But again, that's just me. I don't see it really as a great bearish opportunity. They can't really draw a trend line, right? I mean, we could draw that, but I don't know how much use that's going to be for us. We've got all of these moving averages to prop us up. I still believe the best way to be looking at the rut overall is just in this range, and that's how I will continue to treat it, at least until it clearly gives me a reason to treat it otherwise, which almost certainly means it's going to have to break one way or the other. So certainly not a bad move down for our condor traders. It's been a pretty good run to the upside after a run to the downside. So you're probably getting a little, not unhappy to see it cool off if you're doing condors on the rut after the last couple of weeks of bullish activity. Really, I don't think there's much to see here on the rut, still very, very sideways. It's where we get into our sectors where things are going to get a little bit more interesting. Now, in materials, we're in the same spot that we've been all week, right? Knocking on that door of that breakout, potential breakout, just waiting for that first shoe to drop, so to speak. And I think the big thing, and I really, I believe this at least, the biggest thing is so much of the leadership just is not pulled back. And now they've had some time to consolidate. Is it beautiful on Lynn's consolidation? No, it's not the prettiest consolidation I've ever seen, but it is one, right? We've had such a strong movement. It seemed like we had to get a pullback, and if we didn't get a pullback, we had to get a consolidation within some of these big movers and big names within this sector. We're still basically waiting for that. Over on Ecolabs, though, kind of an interesting development, I think, for a potential trade going into next week. I know this one will be in my watch list, where after kind of popping up a pretty steep sell-off on volume, I didn't really like that. We talked a little bit about the price was right, but that volume did scare me a little bit. After having a nice upward move yesterday, a little bit of downward movement here today, if we can hold this low and then rally up and take out this resistance, I'll just steal this line here. That could be, that little turnaround signal. That would kind of give us that intraday upward trend to develop, right? Again, have to project a little bit because I don't know if or where this will happen. But if it happens on Monday morning, we start hitting up on Monday morning, create that higher low, and then take out those two highs from yesterday and today. As you look at this on a short-term time frame, that's going to be that classic reversal type of pattern, right? Where struggling, then create that higher high, higher low combination, even be breaking above the 50 hourly moving average in this case, if that's important to you. I think this will be a fun one to be keeping an eye out early on Monday. I could see an entry there personally. I like that type of pattern. As you guys know, I like it better when it's on a daily chart than an hourly chart, but a pattern's a pattern and a chart's a chart, right? So really status quo over in the material sector right now. There's going to be opportunities if we want them in this area, but we really almost need to get through that resistance. Something's kind of got to get the ball rolling. Extended to the upside, but now we've had a chance to breathe for almost 2 weeks. We've really consolidated right in this sector. So I believe we're not, I think we're going to get a break. I do, as unless the market really loses this fight at resistance, in which case, well, yeah, we probably won't. But if we, can win this fight, I do expect that, and I expect with these strong trends, these to be very appealing areas for us. Just might take a few more days at least before we get there. Over in energy, just another day kind of hanging around. I think the market kind of feels about these energy stocks the same way that I do. We went from pretty bearish signals to very quickly bullish signals all over the course of less than a week here. I think we see them as a collective unit in the market, and we're respecting them, but I don't think we're all that excited about them, at least not yet. Right, a couple of days hanging in there, so you have to appreciate that, but really not seeing a ton of movement, at least as of right now within this sector. It is still either neutral or a little bit of I think it may be a tad bullish if you have to do it. I ranked it at 50 for the scouting report meeting because quite honestly, that's about how I feel about it right now. I need a little more upward movement to start to feel comfortable with it. If I get that, we talked, of course, we found it together actually, Chevron. That if we can get some strength, if we can get that upward movement in that sector, confirming a break on this chart, this is something I love. You guys know that, something that's tested the same spot and failed time and time again. Probably will fail again this time too. But if it doesn't, that might be a little bit of a signal for the bull. So this is probably my favorite bullish energy play going into next week. That's a tough fight, right? That is a tough fight. We kind of ran up to the top today, but you can kind of see that got over real quick. So it was not going to break that major level of resistance here today. I think it's worth sneaking a peek at what some of these companies look like. Of course, I'm a big fan of that Chevron chart for a potential break. But again, you see things like the Conocos, they're still got some work to do, right? We can see that we've recaptured a little momentum coming off of some support, and that line is terrible. But as you guys know, that is usually how a live line is drawn for me. It hasn't really broken the trend just yet, right? It's showing some signals, but not really broken that trend. Same type of situation on a lot of the E&P companies, where either held some support or created that little higher high, higher low, but a lot of overhead on top of them. Oxy actually won for the bear list in my mind. So no matter what energy wants to do next week, if it wants to be strong, I think a bull play or two is not a bad thing to have in the watch list. If we do sell, there's still going to be some out there. Oxy most notably, as you can kind of see. Let's just go into a weekly chart here. Definitely testing a major level of old, it's a zone, right? It's certainly not a number, but kind of in an old zone of support. Certainly has been a weaker, in my mind, relatively stock within this sector. Even saw a little bit of a bearish candlestick here today. I think we need a little bit more movement to be too excited about it. But if we scrunch this down, and yeah, let's scrunch it down into a 2-hourly chart. We have a very consistent upward trend right on that hourly, a very consistent channel really that has developed during this rally of energy right into a resistance zone. If that gives out, you could talk me into at least thinking about something on this. That would be a little bit of a bearish retracement, still intact. Don't love that we've recaptured that 9, those moving averages. But for me, at least, I'd almost want to see the movement that got me below the 9 anyway before I got too excited. So I think as we go into next week on energy, we're open on both sides. So yeah, Oxy's been one of my favorites too, Scott. You probably have been a similar school of thought then. So just because you perform poorly doesn't mean I don't love you by any stretch of the imagination. I think the right approach going into next week is still be a little cautious with energy, be open, but don't feel like you have to jump either way. Whatever movement we see, we're kind of in one of those weird spots where I think, depending on what your bias is, it can be easy to talk yourself into, yes, this is awesome, or, oh, this is terrible. And I think that with where we are on the chart right now, got to be a little bit careful going into next week on energy, but open to both sides of the coin. That's how I will be going into it. I'll need some movement to get confirmation. So either I'll get it or I won't. So it'll have to start without me, though. I do know that much. Over in financials, in a little bit of selling, not a great looking candle. Again, much like the overall market, it just wasn't going to happen today. And certainly financial wasn't there either. A little more relative weakness, say, to the S&P on the intraday. A lot of profit taking at the end, but again, I think it makes sense that there was some profit taking on whoever your stock is, Travelers, Lowe's, MasterCard. These are still very much intact trend wise, so can't really complain about that. Of course, exchanges, the CMEs, the ICEs, the NASDAQ, still holding steady. Again, not a great candle, but still holding its swing low, and was a really good candle early in the day, but the profit takers definitely came out to play. There's actually, let's go into this list. I found a couple things, because it is, like we've talked many times, it's the banks that really kind of concern me. So I think there's some interesting bull plays. I'm always, looking for entries in those nice upward trending, exchanges and insurance companies. But Ally, who was on my breakout list, and I believe we had him in the stock report a few weeks ago as well, working right back into that resistance zone. Definitely something that I could be interested going into next week. Very similar, albeit different type of a breakout pattern on a DFS here, where we've created that higher low, had that deeper pullback, kind of regained that higher low here, still kind of waiting for a break, but not a lot of resistance. This is also a pattern that I like. I usually like this pattern better than the deep retracement pattern personally, where something does develop like this and then there's some empty space. If we can clear out of what ultimately develops as a resistance zone. So I think that's an interesting one on the bullish side of things. On the other end, there's definitely going to be some banks knocking on the door of some breakdowns. And First Republic here sitting there, just not a good look in my mind, at least. Definitely on my bearish breakdown list. Another good breakout candidate in Legg Mason, although I think Ally's a little bit better, and another breakdown candidate in NTRS. So it's really mixed. It's kind of what it's been for a while now. It's just really starting to stand out more and more, I think, that, it's a lot of the strength has been in insurance and has been in our exchanges. A lot of the weakness has been in some of the regional banks, even some of the bigger banks. Well, it's not been particularly weak. It's certainly not been what I would consider strong. So opportunities on both sides in my mind as we get into early and late next week in the financial sector. On the ETF, much like yesterday, if we can clear this resistance, again, it's kind of one of those DFS patterns, right? If we can clear this resistance, a very clear path up to that next level, just north of $28, around $28.10 before we run into our next challenge. I was a little surprised as I was going through my routine for trades for next week. I wasn't able to find anything I liked for early next week in the industrial sector. And this is just the way the charts have lined up. I still like this sector. I think this was a good signal. We've created higher highs and higher lows. We don't really have a lot of really any resistance really until we get into that $79 marker, that $80 range on the ETF. So early movement next week to the bullish side. I might actually like the ETF as a tradable instrument. If it kind of does this little dance for a few days, we'll probably get some good setup. So I was a little surprised, though. I really didn't find much of anything. The best thing I found was something that won't be realistically triggering or hitting an entry point at early next week at all, and that's Colfax here, which basically is in a nice sideways move. I had them in my breakdown list last week. They're still in it, but now they're in my breakout list because we've established a pretty clean little range. But with so much of the movement that we've seen, we saw some really strong movement in industrials this week, right? Big move on Boeing. I'm not ready to trust Boeing personally. If I were, I could get it. We could build this little intraday resistance, and a break above that could be something, but I'm not ready to trust them. 3M, it's nice signs of reversal, but are you ready to? Some people clearly are, right? Maybe I should be one of them, but I haven't been one of them. We're still holding up on our railroads, but they have stuff on top of them. We've already bounced a little bit off of support. And so even on something like Honeywell, a little bit of profit taking, nothing really to see here, I don't think. Still holding the breakout point, for goodness sakes. This could be one if we see a little doji or a little bit of upward movement early next week. If you like buying off of the breakout point, you kind of see we held up here today, kind of in a little bit of a pinch, as Coach Mark and I tend to call it right now. But if we were to see some upward signals develop off of this location, maybe that would make a little bit of sense. But that's even going to take a little bit of movement for me. Off of a candle like this, I'm not going to be the dude that's buying the very next morning on that. Then we've seen our cats and our John Deeres really rally, and you have to appreciate the strength and definitely tip your hat to it. But I don't know how to, comfortably trade this, at least directionally. It's certainly not where I'm at. Even some of our defense, little bit of profit taking. Now, maybe we can get that little consolidation break that we've seen so many times. But that's still going to take at least a couple of days early next week, I think. So for me, industrial is kind of one of those that I like the sector more than I like the trading opportunities to start next week off. We'll see how we develop. I expect something will. Usually it does, but I was a little surprised that there was really nothing that I was really excited about for as early as Monday morning. Over on tech, again, a lot of it kind of comes down to the same stuff that we have talked over and over again. Hey, look at that. I remembered SMH. Still need this break in the semiconductors, right? And we're going to, for me, I really need to see that before I get on board. Just not there overall. We've seen some signs of life, but we've also, seen some questionable stuff. We see AMD, pulling back to 30, upward movement. I know people who are trading into it on a breakout, and I understood it. The reason I was concerned wasn't really its fault. It was the sector, the industry. The semiconductors have concerned me. If this support gives out, I don't know that that's a great bearish situation, but I would call it a little bit of a bearish signal. We've got a lot of things to prop it up, whether it's the 50-day moving average. We have a pretty consistent trend line, it looks like here on AMD that's got a little ways to go. So I don't think you could be bearish, on a break there on AMD, but I would call it a little bit of a bearish signal. If that support breaks out, creating lower highs and lower lows, a little bit of room to go before we catch that next level. I still have my concerns, and they're going to stay until I get a break of resistance on the semiconductors. Maybe it's this level, maybe it's something new that develops, but I really need to see that. On the other side of things, that's really where my concern has continued to be as of late. It does impact how I view the sector overall, but it doesn't really impact how I view the individual components of the sector. The Visas and the MasterCards, they've been great. Our Cisco broke out on the intraday, probably had some intraday traders out there jumping in, getting involved early, and hope you took your intraday profits or at least thought about it. Did see a lot of selling at the end of the day in Cisco. For me, I think we need just, of course, a close is a close, right? So I'd like to see some movement early next week, but I really like this type of a pattern. A little bit of profit taking on Adobe, but a lot of strength on Adobe, on Oracle. Again, today, notwithstanding, two big movers on earnings, overall showing quite a bit of strength. Even IBM, I think you could almost convince me that IBM's a breakout. Now, it's IBM. I don't think it's a great stock to trade as opposed to more an investment type of a stock. But that's just my personal opinion. I think you could argue that would be a little bit of a signal. So you look at the individual stocks, and a lot of them are showing some sort of strength. In some cases, I believe quite a bit. Other cases, more neutrality. But it just comes back down to how you feel about those semiconductors, and that will keep me a little cooler than probably a lot of people on technology, at least going into next week. But as you look where we are on the ETF, Gravestone Doji, but holding the breakout point just below that all-time resistance level. So what can I steal? I can steal that. That's no longer useful. So we can definitely look at this as either a potential support bounce early in the week if we kind of see some signals develop, if we're looking bullish, or potentially a break later in the week or maybe the following week, depending on how it plays out. So I still believe there's some good opportunities in tech. I really do believe we need the semiconductors to get on board before we really get a tech run, which is okay. That's okay. Some selling over in the staples and both the staples and the REITs today. Quite a bit of selling, opening up the door for maybe some pullback opportunities. Now, again, is it Monday morning? I guess that's up to you to decide individually. A little bit of a gap down on the open. Holding up, I don't think it's there just yet. Almost think you have to clear today's tops before you can really start thinking about that. Definitely want to see a little bit of a shift in momentum type of a candlestick. But overall, I think you are happy to see a little bit of a retracement develop on the sector overall. We had that upward movement, but really it's kind of just hanging around still in that general sideways range that we've been for now a couple of weeks. So certainly we'll be looking for pullback opportunities continually really in this area. But again, it might be one of those areas that does need a day or two to get a little bit of confirmation for us. No such thing in utilities as they remain strong, right? The money's always got to go somewhere. A little gap down on the open, like the staples, but unlike the staples, as soon as it drifted into, in this case, I don't know if it played a part or not. I would assume it played some. The 15-minute, 2-hour or 200 moving average, if I can say that, really had a lot of movement, really a lot of bullish momentum coming back into it. I know we've looked a lot at SRE. That's kind of the utility company that I've been enjoying the most lately. More upward movement. Whereas, I know some of you, and we had it in the report as well, AEP. Still pushing up. So again, it really comes down to the same thing as it's been for so long. As long as it makes sense technically and it fits your system, you're open to it, I think. So when it comes to the utility sector, kind of a little bit of a consolidation type of a period, a little bit of a break yesterday, we could call it, but certainly not any follow through here today. But that is probably going to open up the doors for some potential opportunities for us. You have something like a knee here with a nice little high base. If you zoom out long enough, it actually looks like a little bit of a cup and handle, as well. That one kind of stood out a little bit to me. You still have things like Duke that are a lot more sideways and definitely not my style, but they've been showing quite a bit of strength. You had a breakout on Dominion, and they've got I thought so. I don't follow these guys regularly. They've got a overhead that always concerns me, even though maybe too much. So probably not my cup of tea. But there's definitely things out there, right? Just another day of going up for Southern. So we're going to have some potential opportunities going into next week, just like we have pretty much for quite some time in the utility sector. As I kind of go through these big names here, I think knee is pretty clearly the best technical setup with a little bit of a cup and handle high base developing. That might have to go into the watch list. I didn't put any in my new ones in my watch list for next week, but I think I will move knee over there. I like the way that chart, personally, I like the way that it looks. Over in healthcare, really battled back, showing just a ton of resilience. We've just seen this just all week, really all month, right? Just another solid bounce back day. You look at that weekly chart, knocking on the door, closing above resistance, ton of momentum, hard to bet against this sector right now. I saw that gap early, but really, much like utilities and maybe even more so, a lot of, switch in momentum very quickly, a lot of profit taking at the end of the day. But again, that kind of happened broadly speaking. And with it being Friday, my theory and how I'm treating it is that's just what happened. People were taking profits. There's going to be plenty of interesting things out there for us. UNH kind of knocking on that door. We had that break, and then the 200 pushed us back yesterday, but pushing back right into it here today, showing a ton of strength. You've got Merck kind of sitting right, it actually ran into its 90 EMA today, but a little bit of a doji. It's kind of an aggressive or shallow pullback, but a little bit of upward movement. That is certainly a pullback opportunity as early as Monday in my mind, with some upward movement. Pfizer probably is still kind of waiting for the break of the break after it broke out a couple of days ago. But you see that on Merck. We've got MDT here. That, of course, Ilka's kept on the radar, kind of like Pfizer, kind of doing that dance, giving us the opportunity. If we wanted to look for opportunities into the breakout, it's definitely giving it to us. Over on Lilly, did see a little more downward movement, but much like the sector overall, we caught our footing. I think we can call yesterday's high resistance now with the downward movement that we've seen. If that breaks, I don't think you can buy personally until we take out that resistance zone. But if we take out that resistance zone, it's a little bit of a different story in my personal opinion. If we sneak over to the healthcare side of things, let's see if I can find them really quick. Holix was another one, much like Merck, that kind of pulled back and popped off of that old breakout point. I put in the wrong ticker symbol and I didn't change it so I would remember the actual ticker symbol. Medicine Company, they kind of changed a little bit. When I found them a little earlier, they're just starting to break out. That's a little trickier maybe to trade. ZTS, though, certainly a nice little doji after a tremendously strong move. After a break on earnings, a little bit of a doji at that 90 EMA. There's definitely some interesting candidates out there in healthcare. I remain pretty darn bullish on healthcare personally. If you look at that ETF, where'd you go, ETF? Doing too much zipping and zapping for my brain to handle on a Friday at least. If we can take out yesterday's high, which I expect us to do, barring really the market turning, I see no reason why it's somewhere very near down the road. We're talking about, got to respect that $96 at resistance. I think that's the next line in the sand. So I expect to continue to like this area. There's all sorts of offerings out there too, no matter what kind of style you like. There's all sorts of different trade setups. There's still some things that are bearish, certainly there always are, but for the most part, we're pretty darn bullish in my mind in the healthcare sector right now. Over in the discretionary, just kind of knocking on that door of that resistance level, right? That's kind of the highest we've ever been on this ETF. It's kind of the same story that it always is with this area, showing pretty decent strength, kind of at the top end of it. Most of the cast of characters that are struggling are the same cast of characters that have been struggling for a while on some level or another: Kohl's and Macy's and Urban Outfitters and so on and so forth. Overall, we're seeing some pretty decent movement. Got a little bit of a consolidation breakout pattern developing on Starbucks if we've been itching for a way to try to get into it. I saw Lauren in the halftime report today. She moved in on that target. Very nicely done. I don't know if you're here today, Lauren, but nicely done if that is the case. Still seeing some decent strength. I think we have an interesting breakout potential on a McDonald's too. I really like this type of a pattern. Still need to break it. It's going to need some upward movement, but one of my favorite setups going into next week. We, of course, have Nike with earnings next week, so certainly will be something worth keeping an eye out for. Let's take a quick peek here at services here, see if I can find them. you have to know how to decipher where I'm at. Services, high base type of breakout, just like we saw before on Copart here. Same pattern has developed. On the other side of things, GPS is clearly, in my opinion, a little bit of a breakdown candidate. Kroger, after reporting earnings and gapping down and really fighting back yesterday on earnings, I didn't get a chance to look at the report. I'm going to do that this weekend. But the price action today, you can see big heavy volume the day after earnings. We always expect that big heavy volume the day of earnings, right? Especially on a gap of that magnitude. A ton of bearish activity today, a lot of volume, top to bottom, giant red, almost an engulfing candle, other than the little shadow that we put out yesterday. That one definitely caught my attention. Even though KTOS is here, they're actually one of the few industrials that I found for a breakout, a little small. I think they're a small cap, arrows, just north of a small cap, a small mid cap company knocking on the door of resistance. Of course, that's been a very strong area, and I'm not opposed to adding a few more defense stocks to my watch list. There's our McDonald's. You've got the railroads. We got railroads. The Finviz screener mixes up the railroads and some of the industrials with them for some reason. You have Park Hotels, a little bit of downward movement, a little more downward movement. I think you could call that a bearish retracement. So there's going to be a little bit of everything, and not a very straight line, but you can kind of see where I'm coming from. I hope on that side, pretty good volume today too. So if we can kind of take out today's low, could be a little bit of a signal. Williams-Sonoma, though, kind of a nice consolidation after breaking out. So definitely some interesting things on both sides of the aisle, in my mind, with the services sector. I think we continue to treat it as we tend to treat it normally, right? We'll take advantage of the strength of the sector, but we always are kind of leaning on the individual stock maybe a little bit more than something in the real estate sector or the utility sector. And there was a huge, and that was a big break. I'm glad you brought that up, Scott. Let's look at Humana really quick. You're absolutely right. That was a huge break. That was kind of one of those patterns where we created that higher high, finally created that low, really broke out on good volume. Definitely something from the healthcare sector, I believe, belongs in a watch list. I don't know exactly, because I'm not the type of trader that's going to buy on Monday morning into that momentum. As a general rule, that's not my style. I don't know what kind of pattern I'm going to need to develop, but that is a good call. That is a tremendous break, tremendous volume behind that break in a strong sector on a beat up stock that probably isn't going away anytime soon. One thing we kind of want to keep in mind and keep an eye out for on these guys, and I guess probably depends on where you're at. We're kind of right there at that trend line, right? You guys know me, I'm not a great trend line drawer, but we're kind of right in that ballpark. Some upward movement would get us out of there. That is a bullish candle, though, for sure. You look at this weekly, you don't see a lot of weeks where we gobble up both the 9 and the 20 weekly moving averages. They do not happen very often. And if we can get a little follow through next week in the strong sector, that is a very good call. Thank you, Scott. I saw that too, and I was thinking, wow, that is definitely a turnaround. That is definitely, whether it's for a trade in the very near future or a little bit down the road, we have seen the stock beaten up pretty bad together, right? We are now seeing the shift in the momentum a little bit. On Humana here. And I don't think that's really up for debate. We've got some W-type pattern breaking resistance. And I think, we've got that channel, and I think we're kind of right there. We could, say we broke it or didn't, depending on where you like to draw your line. But I think it absolutely belongs in a bullish watch list. Just don't know exactly what to do with it as it stands early next week. Over in the REITs, much like the utility sector, we kind of gapped down on the open. Unlike the utility sector, we just kind of hung out, right? We caught our footing pretty early. REITs have been, of course, tremendously strong, but didn't really get going. And I don't think that's a bad thing at all, by any means. Gives us at least a potential opportunity to look for some entries into these REITs. I don't know why I look at SPG because they're always looking pretty rough, but not looking great, just because one day of a pullback, right? We might need a little bit more of a pullback, but you've definitely seen strength across the board. You had VTR. What did VTR do today? They're a healthcare facility rate that after breaking out has just ran like crazy. Yeah, I don't know how you trade that one either. So maybe we need a little more pulling back before we get those great opportunities, but you have to have that first day, right? You have to have a day of pulling back. Where this kind of leads me, after especially looking at a couple of those bigger names, is a little simmer down, whether we get a little deeper pullback or catch our footing and start to see some upward movement. If that's the way it goes, maybe the ETF is an interesting vehicle for that. If we get a little bit of a deeper pullback, well, there's going to be some really interesting REITs out there if we can ever get one. I would love to see the REITs, slowly kind of pull back into that $37 range. And I don't know if I'm going to get it, probably not, but I'd love to see it slowly work into that range. Some nice pullbacks in REITs that say took a week and a half to develop. Oh goodness, that would be fantastic. As we are right now, it was just a day of profit taking, right? We look at some of those stocks, those charts are still very, very much intact. And over on XLC, not a whole lot to see here. A little bit of upward movement. Of course, when we see some upward movement in Facebook, we're going to likely to see that there. Again, I don't think there's a lot to see on the ETF or on Facebook right now, at least until Facebook breaks resistance. I don't think, they think there's lots of interesting areas. We're kind of at a battle line for Google. This is definitely one to be watching next week, I believe. We're testing that old breakdown point, that 200 period moving average, still below every, moving average on that weekly time frame. Is this a retracement? This should be where the decision is made. If we can push back above that, I'll just steal that there. If we can push back above that 200-day moving average, I'm ears again when it comes to bullish on Google. Probably not going out of my way to trade them because there's so many better looking charts out there, at least right now, but I would listen to the argument to do so. I think we need to clear that before we can get there, but it's putting up a little bit of a fight. On the other side of things, we can kind of watch for that downward movement, watch this 9 kind of give way. If this is a bearish retracement, that's how, on the bigger retracements, whether bullish or bearish, I always like to see that 9 give way, as you guys know. Much like Coach Mark, I put a lot of emphasis on that as a potential catalyst and certainly as a momentum gauger as well. So as we look at the ETF, really just kind of another day, another dollar. You could argue a break is very much in play, and I think that's a fair argument to be had. But again, just like usual, not a whole lot to see here. Now, with that being said, certainly we've got our friends over at Disney consolidating. Almost couldn't have asked for anything more than what we've got for this chart in my mind. The only complaint I have is somebody got a little too excited back on the 18th and gave us this shadow or wick breaking just above that resistance level. But we didn't hold it by any means. We put together a pretty clear top. Along the way, we've kind of inched up on our lows. They're kind of just getting a little bit higher as we go. Certainly a very interesting breakout candidate, in my mind, going into next week. Really like that all-time high, nice consolidation, creating a little bit of a wedgie type pattern here, like where we're going if we get a breakout on Disney. So that's where we find ourselves overall on the sectors. Not tremendously different than where we were yesterday, but certainly things are going to be lined up for some trades that maybe need to take a little time for setups, at least early next week. But some, looking at things like healthcare and things like that, certainly could be some early opportunities if we break early in the week as well. And heck, there's even some bearish ones out there, right? Maybe not bearish sectors, but there's always bearish components no matter where you look. Of course, over on the VIX, not much to see here. A little bit of a creep up, but I don't know if, I don't make anything of that personally. The big story today is that break of that dollar. That is a pretty ugly break. First time in a very long time we've broken below that 200-day moving average, right? We're going to have to go way the heck back here and a little bit different, but at the same time, the same thing. We were doing well. We kind of turned over. We broke that 200 and things got rough for a very, very long period of time. Now, I'm not saying that that's what's going to happen, but I am saying that last time we broke the 200, which was quite some time ago, not only have we stayed above it, we've bounced off of it time and time again. that's pretty darn ugly going in, at least into the shorter term on the dollar. Certainly anything, right now from a bullish perspective, I would be very cautious of on the dollar side of things. Really could understand the bearish argument quite easily, especially with any follow through going into next week. So not a great look for the dollar. A lot of weakness on the dollar, of course. While the dollar is getting punished for recent Fed wording and decisions, gold on the other side, which I think for most of us here at the market recap, I think this is for us what we trade more than the dollar. I know for me, I know many of you personally, so I know for you guys probably it's too. Just another strong day, closing just a hair above 14, and just a hair, literally a hair above it, but just more tremendous strength. As I mean, what do you say about gold other than, yeah, it's awesome. It's very, very bullish. If you aren't bullish on gold, that's fine, but you probably shouldn't be bearish on gold right now, right? So if you're letting other people have fun with it, certainly that's one thing. You can't, but I don't think you want to be betting against it. A lot of room, right? There's room to go to the upside right now. If you're trying to trade gold as a trader right now, you almost have to go down into intraday time frames to see what things that you can find for entry points. There's actually one setting up really nicely right now, and we have a very similar pattern on silver as well on that intraday going into, of course, Monday or Sunday. I guess I have to remember that, but a nice little upward move developing with a little bit of a break. You're seeing a very similar pattern to that on silver as well. So if we're looking at entries in gold right now, we're just not, it's so hot that it's hard to get that. I mean, I would have loved to see 4 days of consolidation, then a breakup. That would have been a very easy trade, but that is not the environment that we're in right now on gold. So might have to look to intradays if we're looking for, new entries into, swing type of trades. I mean, it's still a good time maybe to, be open to selling some puts and things like that. Similar development over on not quite as pretty, but a very similar pattern developing on silver as well. On the intraday here. I used to be able to draw two lines at the same time, and now I don't know why I can't, but oh well. So kind of seeing that type of pattern develop right now. I mean, it's bullish. The metals, gold, silver, they are very, very bullish. There's really no doubt about it. A little, certainly not a particularly great bullish candle on silver today. But, when you kind of think about everything, we ran all the way to resistance. We basically traded between support and resistance in one day for basically the second day in a row. So more strength for sure in this on silver. A little bit of a pullback into that 1525. That would be an interesting setup. Like we've talked many times, really for me, I needed to see it break above that 1525. I'm being greedy here, but a little bit of selling into that could actually be a really nice entry in my opinion. Over in natural gas, just another day of misery for natural gas. Watches everything else go up around it, day after day, week after week, and it not involved. It doesn't get invited to that party. Probably isn't likely to get invited next week either. Realistically speaking, more downward movement, a lot of volume. Breaking that little intraday floor this week really threw some cold water on, the three bulls that maybe were out there. There couldn't have been too many of them. Again, same as always, support this breakdown. So that first line in the sand, realistically, I don't think you can make a bullish argument until we break above 270, which is an awful long ways away right now on natural gas. So much like it's been since that break. I mean, it's bearish and bearish, or waving at it and saying hello to the bearish traders. I don't know how you could want to be trying to call the bottom on natty gas right now. And lastly, over in crude, working right into that old 58 zone. We do have a little bit of history here. Again, ideally, we get that little consolidation break or pullback, an opportunity. This is an area that people are a little mixed on. We did see, changing signals. Everybody kind of concede that some folks are excited and already here, and that was a great trading breakout, reversal break. I hope somebody here was able to take advantage of that, but I know not everybody's style is that. We're still, we're kind of like energy. some people are seeing it and a little bit shy. Seems like for the most part, folks are more open to being bullish right now on crude than the energy sector. As I look at the different stocks, I certainly feel that way personally. I feel, fairly bullish on crude after that break. And even though I'm seeing some signals in energy, I'm still a little bit shy about trusting them. 58, definitely a level we can keep an eye on. Got some overhead, right? This is going to be one that just needs to develop. Hopefully, we can get this 9 to catch up, whether through a pullback or a little consolidation to push us through at some point next week. So just another, kind of hanging in there. Not a lot to see right at that 58 zone. We've had a lot of, not a lot, but we've had recent significant price action at that $58 mark. A break above that, probably at least a little bit of a bullish signal. We'll just have to kind of keep an eye on this old support zone around $60.50, along with these falling moving averages. Some people are going to put a little more weight on that than others, I would imagine, but they're going to be there whether we like it or not. Let's see here. I know we were able to take a peek at most of the stocks to sneak peek of the watches going into next week. But you have Campbell's. We didn't get an opportunity to look at some of the things in the staple sector after that big, nice move on earnings. Still trying to settle itself. Again, probably going to need a little bit of time. But if we can see some sort of signals, maybe just as simple as closing above that 9 EMA, certainly could be something interesting. BGS. This one was one of the most interesting charts I found today. I'm glad we came back here. This is hanging out. This is its weekly chart. Look at all of its history here. Nice trending stock, and then all of a sudden, we go sideways, keep jumping off of around $21, give or take. Test it, and quite a bit of selling into it here today. I think this is certainly an interesting bearish breakdown candidate for a watch list. Personally, you have CPRI, a little bit of one of those retracement types where we kind of are testing that old breakout point, haven't been able to really recapture that higher high, higher low, but are working on that higher low, right? So kind of developing into a little bit of a pinch type of situation. Could be a little bit of a bearish candidate if we see some downward movement early next week. Very similar with Grey Goose, kind of in that bearish retracement mode. One thing that really stood out to me on Grey Goose was how cheap you could be. If I'm looking for a bearish trade next week, one thing that really stood out was, and I just kind of ballparked it, we really could get into this on a responsible level, in my opinion, using intraday or even today's high low for, pretty darn good risk to reward. So that's kind of what jumped out to me. In addition, obviously that's a bearish retracement. I think most people would agree with it. Whether they were interested in it or not, I think they would agree with it. Goodyear Tire, I think we had these in our reports last week. I know I've been watching them. Really have done nothing to change my mind. I believe they still belong on the bearish list. This is the best they could muster in a week like this. Maybe if they start breaking this little top range, then we can talk about taking you off the bearish list. But right now, I would argue a break below the bottom of this range is a sell signal that you can at least think about. Pull back on Kimberly-Clark, Pepsi, a little bit of a breakout type of a candidate, like high base type of a breakout, and PPC, a little bit of a breakdown type of a candidate, lower highs, hanging by a thread. We rallied up a little bit this week, but not really inspiring a ton of confidence. So I've got them on my breakdown list as well. On the technology side, I think that's the only other one we didn't take a look at. We looked at Cisco. You got a little bit of and this one's really interesting. Not usually, as you guys know, I usually don't like deep retracements, but look how consistent this thing has been on this upward move. On an hourly chart, that has just been so consistent. If that trend gives out, I wonder, I don't know if there's anything to do about it, but I wonder what happens. I thought that was just really nuts how consistent that has been on that march to the upside. I still believe EA has a place in a breakout list either way. I think you could argue breakout, breakdown could be a tradable or at least something to take a look at. FNSR, kind of that kiss goodbye, a little bit, not perfect, but a little bit of a double top breakdown, rally back to that old support zone. lining up with that 50-day moving average. I thought that was an interesting chart. Yeah, Teladoc here breaking, or at least trying to break out of some resistance out of a little bit of a sideways range as well. And Xerox, another one that I thought was interesting. I'm not sure exactly how they closed. Good. You can kind of see they broke out and kind of just hung around the last 2 days. So if you kind of, let's zoom this into maybe a 4 hour, see if that will work. So we had that, very clear top, pull back, get to the top, take some profit, get to the top, and now we're just kind of sitting there, almost waiting for the break. This is the type of chart, if the market, runs early next week, this is a good placement in my opinion. So I'm going to have these guys on my watch list going into next week. So ladies and gentlemen, that's going to do the market recap for today and for this week. But as always, I hope you had a great week trading. I know it was a fun week. Fed weeks are always interesting, right? It kept us on our toes. We saw some nice movement. We saw some boring stuff. It was certainly an interesting week. Thank you so much for joining me as always. It's certainly a lot of fun to do this with you guys. Certainly more fun to do it with you than by myself. So thank you for hanging in there with me. Let's see here. It's Friday. So I'm heading off to the scouting report meeting. You guys head off to your weekend. Go out, have a good time, get ready to rock and roll for next week, but make sure you're enjoying your weekend. It was cool in Utah today. It was like 60 degrees. It is first day of summer, 60 degrees. That is my idea of summer. So it was, hopefully you guys are having some great weather wherever you're at as well. So yeah, always my pleasure, guys. I appreciate you hanging in there with me. We'll get those reports to you on Saturday so we can be ready to rock and roll again on Monday morning. So I guess I'll let you guys get out of here. But of course, be sure, if you're new around here, to subscribe to the channel. Join us over on Twitter. You can find me at FrankMartin23. Check out the Tackle Instagram. Heck, even the Facebook. I'm not a Facebook guy, so I never go to the Facebook page or any Facebook page. But if I were a Facebook guy, I would go to the Tackle Trading Facebook page. So you're all very welcome. Thank you guys for your time. You guys have a great weekend. Get out of here. I will see you same time and channel on Monday afternoon. Thanks, everybody. Have a great weekend. Bye now.